What's going on, everybody? So today we've got earnings season coming up on Friday, so that'll be interesting. Should add some excitement to this market. We will take a look at the reaction to the FOMC minutes and the CPI today. We'll look at a whole bunch of other charts, of course. As we look through the markets, we'll look at some of the setups that we looked at over the weekend, and we're playing, and we've got a new setup to look at as well. Hey, we put a lot of work into these videos, so if you enjoy them, please smash that like button. Alright, so I'm Kevin. I've been doing this for a very long time and hope that I can help you make sense of all this. And if you're wondering why we do these videos every week, it's to keep our members up to date on what's going on in the markets and to highlight fresh opportunities. We have a really cool community of like-minded traders, and members get to take advantage of live streams and live mentoring sessions. So check out the link below and come join us. We'd really love to have you there. Okay, quick disclaimer. If you think I'm an investment advisor, then you should pause right here and read this disclaimer. All right, let's move on to our earnings. So tomorrow morning, we've got Delta Airlines. That's about the most interesting one that we've got coming up until Friday morning, when we have earnings season officially kick off with the big banks. And you can see the biggest of them all, JP Morgan, right there at the top of the list on Friday morning. We've also got Citibank, Wells Fargo, BlackRock, and also to throw in there, you know, the world's largest healthcare company, United Health Group. Should be a really interesting start to the day on Friday. All of these can move markets. So again, interesting start to Friday, and the beginning of earnings season. So that's always fun. All right, so what do we've got? So we're going to, in a minute, we had CPI and FOMC meeting minutes today. We did not have a JPAL press conference. I don't know why it says that. We'll talk about those in a minute, though. Tomorrow, before the open, we've got PPI, which is the purchasing producer price index, and then we've got unemployment claims as well. Friday, we have retail sales, very important number. We have the U of M consumer sentiment and inflation expectations data, and those are pretty important as well. Okay, we're going to take a look at the market. We'll look at the major indices, international markets, commodities, the major sectors, some setups that we were playing, and a new setup as well. But first, let's take a look at our trend tracker. So we're measuring short-term trend here, 1 to 3 week time frame. We were up in 6 last time. On the weekend, we have moved down 1 spot to a 5. So now we're in the sort of bullish, choppy area. If and that's only because we're looking at out to a 3 week time frame. If we were looking at a 1 week time frame, we would be right here at a 0 or a 1, because we have definitely gotten quite choppy over the last week. Okay, let's bring up a chart of the S&P 500. And you can see that chop. You can see that we've been up and down and forming a nice range, nice space to break out the top of. But when we look at this bearish engulfing candle today, it doesn't look like we're going to be breaking out of the top of anything. Nobody would blame you if you've got really bearish today. We had that nice big gap up and then closed that gap almost instantly, and pulled back in. Now, we did find support right at the 10-day moving average and at a major support level. And we're going to see that a lot today. There's a lot of charts that are finding support at levels. A lot of them the 10-day moving average, some of them the 21-day moving average, or they're finding support at trend lines or horizontal support. A lot of them. So this sort of gives me reason for hope because, I did not at all like the price action today. I didn't like it pretty much right from the start, and I'll show you why when we look at the intraday. And it caused me to close out a lot of my the swing trades that I had initiated recently. So let's look at that intraday chart and go over the reaction to some of these reports that came out today. So here, you can see on this 5-minute chart of SPY that this is obviously where the CPI report came out. And obviously the market liked it. The report came in just slightly below expectations with numbers that were below last month's. So showing that, inflation is waning, inflation is easing. It's exactly what we need to see. It didn't come down so much that we should fear that the economy is in trouble. To me, it was a Goldilocks print. And I thought, okay, this is great. When I saw it go up like this, I thought, great, we're going to have a really nice day. We're going to have a pullback, but it should be a strong day. Now, in this pullback here, it didn't bother me one bit. It's in around here. I started, wow, this is getting pretty deep. But then we have this nice reversal candle here. And then a big green candle to follow it. Thought, great, okay, here we go. Then we rolled over. There was no follow through that. It's like, all right, well, how far down do we come now? We came all the way back to basically right before the report happened. And bounced there. We find buyers. We can see all these buying wicks on here, and we finally started to move up. But that it had some difficulty getting out of this zone was a little scary. That was weak looking. We got up in here, and look at this. Now we've got the selling wicks. The bears are starting to take control in here. It's like, uh-oh, and then then they really show their hand here. All these buyers that had probably bought in here were like, oh, this is not good. I got to get out. And they all ran for the door at once. And now look at this. We are below our early morning consolidation. Not good. And you can see we came down lower. Now we had a nice little bullish hammer candle in here. Started grinding our way up. We're coming up. We're coming up. And up in here, up and around here, especially when we break out of here, you may be thinking, oh, okay, great, we're in fine shape. And nobody will blame you for thinking that. We got at 2 o'clock, which is right here, this candle right here. That's where we got the FOMC minutes from the March meeting. There was nothing new in there, nothing that we didn't already know. So I was just surprised it was even this volatile through there. You get this nice big green candle after, within 10-15 minutes of that report being released. And you'd probably thinking to yourself again, all right, everything's fine. But we could not get through this intraday resistance right here. And then we started to roll over. Right in here was an announcement from somebody in the ECB saying they will likely be continuing to raise rates over in Europe. And our market did not like that at all. And we had some really strong selling in here. And continued down through the end of the day. We did get a bit of a double bottom here right at the end of the day. So, we can be a little hopeful about that. And this is where we're at right now. So not ideal, not the kind of day we were looking for. So, I mentioned that I didn't like what I was seeing. When I saw this roll over here, that's when I decided that I don't like what's going on here. This is a little weaker than I'd like to see. But I thought, okay, I'll let it play out. And when we started getting in here and getting indecisive, I saw these wicks, I thought, you know what? This is a good time to either start taking profit off of some of these swing trades I've got on, or just close them out completely. Because I had swing trades in here that were very weak compared to the market. And so those are the ones I just closed entirely. And some others I just took little pieces of profit off. And there are some that I still have on. So that's kind of where we're at with that. And we'll talk about some of those swing trades towards the end when we will review those, the ones that we looked at in the weekend anyway. All right, let's move on to look at our Qs. And we'll see a big bearish engulfing candle here. A little bit weaker, underperforming. The Qs have sort of been underperforming most of the week. The IWM has been outperforming everything. We'll look at that in one sec. But you can see in the Qs here, right around the close is right around some of these other highs and lows that it's been at. Should probably actually just move that line down to there because it makes more sense there. There we go. You can see we're right on support. And right below there, we've got a 21-day moving average in the top of this gap. So there is support just below us. and sort of makes one think that, hey, you know, what happens tomorrow if this just flushes down a little bit and this acts as support? We could get a decent bounce out of here. You know, so maybe today is a bit of a bear trap. It's something you've definitely got to keep in the back of your head. It's a distinct possibility for tomorrow. We also have to consider that, yeah, this could just keep going. And, you know, I mean, we could see a really nasty day and we could come down to the bottom of that gap tomorrow. Both of those possibilities are in play. AWM, really big bearish engulfing candle here. Look at this. I mean, we gapped up right on resistance and then just pulled back all day. But it did find support right at the 10-day moving average, or at least the close near there anyway. Volatility index. This is another reason why I thought, you know what, maybe there is a chance for a bounce. Maybe this is just a fake out, you know, a bear trap. Because look at volatility index looks fine. It's just chopping around in this range here. It's not like it's jumped up, you know, 5 points or anything. This index is not telling us to be super bearish. 10-year yield. This did draw a little bit of a hammer candle here, but this didn't jump up a ton either, right? You know, this pulled back and then it bounced back up a little bit, but this is not super bearish looking here. And our dollar index, let's go over there. You can see, let's go to the weekly actually. If you didn't see this in the weekend video last weekend, I drew this big head and shoulders that's been forming on the dollar index, and targets a move down to around 90 or so. That is still very much in play. Let's go back to the daily. You can see that this is a potential double bottom here. Okay, but the dollar was quite weak today, which is a little unusual considering that the market was also quite weak today. Usually they're inverse of each other. So that's a bit of divergent behavior. So which one is right? Is the market right or is the dollar right? I'm kind of hoping that the dollar is right with its move, and I would really love to see a break below this trend, this neckline tomorrow, and this head and shoulder top start playing out. That would be good for equities, and it would be good for our international markets as well. Speaking of international markets, why don't we go right there now? This is ACWI less the US. You can see this had a nice gap up. It held some of its gap, but still a little bit of a red day. Stronger than a lot of the other indices that we look at. EFA, this is still holding us uptrend line. You can see nice big gap in here today and held most of that gap. EMXC, this is emerging markets less China. This was definitely weaker after a strong gap up. Gave back almost all of the gap. And, you know, emerging markets are the first ones. Anytime there's a sign of trouble, you see it first in emerging markets, right? They are the weakest weakest of the group, and they'll show trouble first. And FXI, China large cap, very weak today, down almost 3%. You can see even gap down. And gap down right to that support level that just gave way, and so did the 200-day moving average. And then it came down to this trend line. Now, early when I saw this gap down and saw how weak a lot of those large cap names were, I bought some puts on this. And very short-term puts, though, puts for Friday, because I think that if weakness is going to continue, if this trend line breaks, this moves down quickly, probably down to this 27 level. By the end of Friday, if things get really weak. I would expect this level here, though, to be very strong support. So that's where we are in our Chinese stocks. I really think there's more weakness ahead. I don't think this trend line is going to hold for China. Let's look at gold. You can see we're pretty much just going sideways after having broken out of this pennant. Still kind of building a base in here. Has bounced, you know, in the last couple of days off this 10-day moving average, though, but can't seem to get above that, you know, this 2040-ish area. How about the miners? Miners were actually surprisingly strong today. Held most of their gap after giving up a bunch of it, and drew a little hammer there. Silver had a strong day. Held on to most of its gains on the day. And this looks like it's going to continue higher. And copper was also had a fairly strong day, which is it's another one of those things that's divergent and makes you think that maybe the equity market is wrong here. Maybe we're not going to see a big pullback in the equity market, because if we were, then generally copper would not be going higher. Okay, oil. So oil had a strong day. Oil was up about 2%. But you can see what's important here about oil is it got through this very strong resistance level. Now, we've got the 200-day moving average just overhead. But this high here this close is the highest close since back here in the middle of November. Interesting. And this is almost a stealth move out of it. Ever since, we had that big gap up, right, on the OPEC news. I guess, in this consolidation, I'm guilty of taking my eye off the ball on oil. And this move today kind of surprised me a little bit. Let's see. Natural gas. Just grinding sideways, consolidating sideways, red candle today. Looking at this chart, there's no reason to believe this is the bottom. Although this is how bottoms start, but I wouldn't put money on this being the bottom. XLRE energy. So this is the overall energy sector ETF, and you can see that this is really kind of underperforming oil itself. So this is a bit of a warning sign. This is certainly not making a 4-month high, is it? If this was making a 4-month high, it'd be breaking out to new all-time highs. But it is not. XOP, the oil producers. Same deal here. I like that it's at the top of this channel, trying to break out of this channel. I don't like that it tagged these moving averages here and pulled back today. But it did close above the top of that channel. Oil services ETF. Again, looking, kind of weak. Not, there's no strong breakouts that are going on here. There's certainly no 4-month highs in this. So this is diverging from what oil is doing. So who's right? Who's right? Is it the companies that service this industry, or is it crude oil itself? It's hard to say at this point. All right, let's move on to our major sectors. We've got consumer discretionary. Retail as an industry group was very weak today. And you can see that showing up in consumer discretionary. Big and bearish engulfing candle. However, we did manage to close right above this trend line.
So again, data connection loss.
And with the 100-day moving average just below. So is this the kind of thing where tomorrow morning this just sort of pokes out below, and then the buyers come in, they buy the dip on that, and bring this right back up? That's a possibility. XLI Industrials, one of the few green sectors today, but just barely green. Very indecisive candle here, right under resistance. XLF Financials. We're not as weak as a lot of the other sectors. So it's interesting to see. Now, it is disappointing that they broke out of this base and
Market
pulled right back
connection
into it.
Reestablished.
Sorry, that's my broker platform yapping away. Regional banks. They tried to poke out above this downtrend line here, this, the top of this descending triangle, tried to poke out there and pulled right back in. These have really got to move out of here. If we keep testing these lows here, it will break through. So really want to see a bounce up and out of here. XLV Healthcare, another one of the green sectors, but just barely. Tried to break out of this strong resistance and failed. But, does that mean, is it going to continue to consolidate up in here? I think it probably will. I mean, this wasn't that weak, right? It's a weak candle, but compared to some of the other things we've seen going on today, this isn't that bad. So I don't fear for this sector. XBI, biotech. This one had a big red candle coming down to the bottom of that channel. That channel is holding so far, and we've got some, quite a bit of support just below that. So I think even if this does break down through, this finds support right here, and then will eventually bounce. There was nothing going on in REITs. There's nothing going on in staples. And utilities, not much going on, but out of the three defensive sectors, I am most bullish on this one. I think we could see a move above these highs right here and probably take us up into this 72 level. It won't be a big move or anything, but it looks like it wants to break out the upside of that. Let's look at technology. That one was quite weak today. Almost tagged this 21-day moving average. So we've got that for support below. We've got this line here would act as support if we break down further. So I'm certainly not bullish here, but I'm not super bearish on this one either. Communications sector, really big bearish engulfing candle here. It did find support today at the 10-day moving average. And you can see we've got some other areas of support. If this should continue down further, we've got some pretty decent support down here. So it shouldn't go too much further. Semiconductors. This is a pretty weak sector today, but it has come right into support, and we've got a little bit more support below with the 50-day moving average. You can see there's a number of highs in here that would probably act as support as well if it came down further. Meta. Okay, so this is pretty interesting. So this one outperformed its peers today. It was ever so slightly green, but you can see that it's gone sideways for the last week and has now broken that trend line. And I think that we may need to adjust this trend line a little bit. I don't want to come, might need to come all the way down here, I guess. Or there. But I think that, I don't fear for Meta. I don't think Meta's about to roll over or anything like that. It's had a really strong move, and this has gone sideways for a bit. Doesn't surprise me at all. It needs to, or these moving averages need to catch up with price, right? The price is getting extended away from all of these moving averages, getting extended away from its trend line. I think this is a really nice setup. Now, if you're bearish and the market is, kind of breaking down a little bit tomorrow, if we see a couple of bearish days out of the market, we probably do get some bearish action or a breakout out of the bottom of this consolidation. It's probably playable if you're
market
super
data
nimble.
Connection lost.
But look how strong this has been. This will find buyers. I'd be shocked if it pulls back any farther than this pivot here at like 197. Probably doesn't even make it there. I bet you that the first time this pulls back doesn't make it down below the 21-day moving average. So I think that if it comes out the downside here, I wouldn't even bother playing it. However, if this does break out to the upside of this and it's giving you a really clean line to play to the upside, I think that's worth a play there. Again, this is not investment advice. Just letting you know what I will probably do, and that is buy an upside break. But only if the market is behaving. This one is outperforming the market, so when the market turns back up, this should strongly outperform.
Market data connection reestablished.
I'm going to turn that off. Okay. Let's move on to Apple. Okay, you can see Apple, has been grinding down over the last week or so. Found support today at the trend line and the 21-day moving average. That really needs to hold. It'd be really nice to see a bounce out of there. And that could catch some bears off guard. So a move out of here could be quite strong to the upside. It could also be quite weak to the downside. So, or there could be a big move to the downside. Maybe down to this 156-ish support level here. Amazon. I think Amazon has been grinding down. Yes, it has. Grinding down in a very weak candle today. I wouldn't be surprised because this is underperforming the market over the last week or so. I wouldn't be surprised to see this continue down even if the market does bounce tomorrow. Let's move on to Netflix. Okay, again here, look at this. Major support, 21-day moving average, 50-day moving average. Major support line, uptrend line just underneath. This should bounce. If this doesn't, it could shake a bunch of people out here. So could be a strong move. Could also be a bit of a capitulation flush here. You know, maybe there's a strong move down, tags this 100-day moving average, and then starts to bounce. You know, capitulates down to here. Catches the new bears off guard after shaking out all of the bulls who were trying to hang on. Then we see a strong move up. Google. And you can see that we're seeing weakness in here as well, but again, finding support at that 10-day moving average, and you know, with some more support levels down below. And Microsoft. This one wasn't too bad today. This was actually green on the day, up about 0.25%. So, you know, again, another one that could maybe be played if the market starts to bounce rather than breaking down. We will probably see some strength out of Microsoft when that happens. Tesla was very weak today. Nasty move down, but again, coming into some support areas here, so don't count Tesla out. All right, let's move on to some of the stocks that we were looking at over the weekend. Some of these I played and have already exited. This is one of them. This one I actually exited on Tuesday. So I bought, you know, you can see where I bought the breakout. And was quite happy with this. Yesterday, though, I did not like that price action intraday. As soon as it started pulling back, I took some profit off. And, you know, once we got back down near the open, I thought, oh, this is not good. And I closed out the rest of the position. Glad I did, too, because there was a fair bit of pain sitting in this. So if you're still in this, obviously you're really hoping for a bounce, and quick. But you really should. There are plenty of clues in this. You know, if we look at an intraday chart on this one, there were plenty of clues that this was failing. Mostly in here, you know, right off the get-go, actually, on Tuesday when this started pulling back, and it really shouldn't have after the day it had on Monday, and was really really weak compared to the market. And then, you know, your second chance to get out of this was when it tried to go up again and failed and put all these selling wicks in here. And this is where, coming into here is where I closed out the rest of the position. And even today, you know, it gave you time to get out. So if you are still in that, you've got to kind of take a look at your methodology and ask why. When you're seeing the weakness that we saw in the market today and you're seeing the weakness in this stock, underperforming a weak market, you know, what is missing in your what is missing here that kept you in this trade? Now, if you have a very long-term opinion on this, that's fine. This hasn't pulled back enough to really shake you out yet. You know, probably not until it breaks down through these lows here. But for me right now, I am quick to take profits and quick to cut my losers, because that's the kind of market we're in my opinion. If this market gives you some profit, you better be willing to take it fairly quickly. Okay, we looked at AQNU, and I didn't realize at the time that there was another version of this. These are the units, and what we should be looking at is AQN. It does a lot more volume. And you can see same kind of look. The breakout here happened on Monday. It was just, you know, just teased across the top of that, and then Tuesday, a little bit of continuation. Very slow mover though, because it's a utility, a defensive stock. It is a very slow mover. This one I think is probably okay, but again, you know, if you got in on that breakout, you should probably be closing this out at no worse than a break even. Oshkosh. was going to be a short. And you see that clearly I was wrong on that. I did say that, look at, we've got support here. It should support, but if it doesn't, I want to go short on it. And it had 3 really nice days. Now, and it outperformed the market today. However, it came into this downtrend line, the 21-day moving average, and stalled and pulled back a little bit. So if this rolls over tomorrow, if the market is weak tomorrow, and this one is weak tomorrow, I'm probably going to short this below the low of today, because I still think this stock is quite weak. I think there's a decent short in here, and I don't think I have to wait until here. In fact, this would be my first target, right? If I can get short here, awesome. My first target, would be here. I'd be taking some off if it shows any sign of slowing right there. If not, if it breaks through here without slowing down, I'll probably add to the position there. Okay, Red Robin. This one worked really well on Monday. Broke out of this little pennant, this little bull pennant that had formed here. Broke out of it early and just kept going. So that was really nice. Kept going again on Tuesday. And then today started to pull back. And early on showed weakness compared to the market. So I just closed it out. I did not like the price action we saw this morning in this. Let's see what that looks like. You can see a little bit of a gap up and then just sell. And you can see here, this is our performance relative to the market. And it was, going down faster than the market. Well, that's not what a breakout play should do. A breakout play is supposed to outperform the market. And you can see that yesterday, actually, there were warning signs in the afternoon yesterday. And, after this broke out, you can see consistent outperformance to the market until yesterday afternoon, when it started, performing in line with the market. And that was sort of okay. Not exactly what we want to see, day 2 on a breakout play. And then by the time you get to day 3 and you start underperforming the market, it's like, especially on a day when you think that, when you're not liking the price action you're seeing in the market, and you think, oh, this could get kind of ugly. So you just bail, sell the whole thing. And, a little bit of profit, or actually, a half decent profit. But, disappointing that this couldn't continue, because this looked really good coming out of here. So, maybe we get a second chance at this. Maybe this pulls back in here. Maybe this comes down to, the apex of that breakout area and gives us a little bounce in there. We could maybe get back in. But for now, that one's off the table. All right, I've only got one play that I like right now after a day like today. This is one that outperformed the market today. You can see that there is a really nice cup and handle on here. And you could even call this, a cup and handle within a cup and handle. But you can see that yesterday we just sort of sneaked above the cup and handle, or the handle. And today we moved farther. I almost bought this today. And would if I wasn't having concerns about the market earlier on. I would definitely have bought this. But didn't like what was going on in the market, and decided to just hold off. And this entry is still here for us. In fact, there's probably even a better entry, and I'm going to show you this one intraday. Look at this here. See this? There's a seller there. There's obviously somebody selling there at 16.25. They'll let it go through by a penny or so a few times, but then they come in and they sell again, and they are very, very well behaved. So really good trader in here selling off, trying not to scare the market. Anytime it drops a bunch, they stop their selling. The buyers come back in, they push it back up. And you can see the buyers just keep coming in here too. Until finally they kind of give up and we pull back a lot. But through all of this, this is pretty much outperforming the market while all this is going on. And you can see here again, I think that buyer may have stepped down in here because we have exactly the same kind of price action. So for tomorrow, I think that what I'm going to do, well, obviously I'm going to be watching this. Now, I wouldn't play a break above this first level. I would wait until we get a nice clean break above this 16.25 area. You can see where I've got my alert at 16.28. I will likely buy once we get above that level. I'm not going to wait until we get above the high today or anything like that. I think that if we get above this consolidation here, or this, this level, that probably means that seller is gone, and I think we can move higher quickly. And going back to the daily chart, you can see what a nice looking daily chart this is. Now it had obviously been in a big downtrend, but I mean we've got a beautiful bottoming pattern put in here, and then this with this cup and handle is just the icing on the cake to this. This could be one of those that turns into a long-term swing trade. So yeah, I have to see, really interested to see how this one plays out. So that is everything I've got for you today. I want to thank everybody for coming out. Remind you to hit that like button if you've enjoyed what you saw today, and share it with your friends, and subscribe. Enjoy the rest of the day and week, and we'll see you again on the weekend.